bull and bear flags. Now, I decided to start off with bull and bear flags as our first technical thing because I think that they are so important in today's market environment that you should know how to identify them. And if you know how to identify something, you should also know how to profit from what you're identifying. So we're going to talk about bull and bear flags and all of their variations. All right, so let's get going. All right, let's do this. Let's talk about the bull side of things, the buy side. All right, the bull game. Every bull flag has to, before we start trying to identify what a bull flag is, there has to be a power move, a bull move, all right? And what you see here is just basically a graphical indication of what a bull move is. It's just a strong, powerful surge to the upside. Now, in reality, guys, I'm going to draw here a little bit. In reality, this strong surge to the upside can be in the form of one solid bar move, just like you see here, or in reality, you could get a multiple bar run to the upside that represents the same thing. Both of these scenarios are bull moves. It's a little more complex to identify the multiple bar surge, but I'll give you a key. There's little to no interruption in the multiple bar run to the upside. What we have to do whenever we get a bull move, either the single bar or the multiple bar run move, and I'm going to draw the other one in again. I want all of you, whenever you get a surge, I want you to break the surge up, at least mentally, into thirds. Top third, middle third, bottom third. Why is this important? Because what we need in order to have a flag, we need, when the stock is ready to rest, when the stock is ready to pause, if that pause happens to occur in the top third of the surge's range, of the power moves range, if the resting period in the upper third of that move, you've got something like an 84% chance, boom, this happens. How your financial item pauses after a power surge is 100% the key. Does it pause in a sloppy way that breaks through the top third? Does it pause drifting down? Does it pause drifting sideways? Does it kind of pause by drifting marginally upward? These things matter. What happens, traders? What happens if you don't get the pause in the top 1/3? What if it drifts downward? A stock must rest after a power move. If it doesn't rest, it's going to run out of gas, and continuation of that power has low odds. In order for a bullish move to remain bullish over a period of time, it must have these resting periods. The same way, if you want your runner to be able to run multiple races and not just one race his entire career, that runner has to have resting periods between each race. In order for this move to continue this way, it can't just keep going without resting. Now, the rest happens in one of two ways. We talked about one way your stock can rest. It rests sideways. After a certain period of rest, as long as that rest is in the top portion, boom, that is an 84% likely result. All right, we've talked about that. But there's another way a stock can rest. It can rest this way. You see that? So I want you to think about this for a moment. Here's your bull run. Your rest is going to come this way or that way. Now, both accomplish the same thing. They allow the bulls to rest, take a pit stop, catch their breath, and move on. Boom. Boom. So when your stock is resting sideways, you need it to stay in the top third. But if it rests downward, you need it to stay in the top 50%. I'm going to repeat that. If your stock rests sideways, it needs to stay in the top 1/3 or all bets are off for an upside break. If it starts resting in a diagonal way, sideways, then it must maintain the top 50%. Otherwise, all bets are off for a nice continued bullish run to the upside. All right? Now, if you break this 50% mark, now any move up is likely to fail. If the stock drops here, stock runs up, then drops here. To make a new high, my stock now has to travel. Bad drawing there. travel, and now make the new high. By the time it's making the new high, it has already expended energy. It's already put effort in. And by the time the new high happens, a portion of its energy has been spent. Okay? However, in this scenario, when you are making, boom, this new high, it's just beginning. You see the difference? So this new high is fresher than this new high because the run started from here versus, in this case, the run is starting from here and is still fresh at the breakout point. Not so much energy has been expended to get to the breakout point. And so this follow-through rate is higher than this follow-through rate because of that reason. Both are great. Both are powerful. Now, the way we play these two things are very different. The way my traders play these things are very different. In this scenario, in the sideways scenario, you are buying the new high break. All right? So check this out. You are buying the new high break in this scenario. Boom! Remember, 5 bars. That's your magic number. You're clearing 5 bars. Boom! You're jumping into the bar that's wiping out the last 5 bars. All right? But in this scenario, when you're drifting downward, you're not buying here. Oh, no. You're buying there. You're buying the green bar that clears 1 or 2 bars before it. 5 bars here, 1 to 2 bars there. Boom. 1 to 2. All right. 2 if the bars are small, 1 if the bar is normal. So if you got a normal red and boom, green takes out, we call that a color change. Green takes out the red, boom, boom, boom. But what's the key? The key is that you must stay, and this must happen in the top 50%, not the bottom 50%. As long as this change, as long as that green surge that is now eliminating a red bar is happening in the top 50%, now you've got decent odds of getting to that new high. If you do this down there, boom, the odds are that. All right? A failed rally. This has higher odds of a continued rally. All right. Good job. Now, I know you might have some questions. I'll get to those. I just want to finish this part right here. This is not the drift sideways, which we know has to stay in the top third. This is not the drift downward, which we know has to stay in the top 50%, right? This kind of slows down the momentum, but slows down in a drifting upward way. So now we've got all three drifts or 3 pauses covered: the sideways pause, the pause that drifts downward a bit, and then the pause that drifts upward a bit. This still expends some energy. This expends no energy. This expends some, but very little. And this is still expending energy a little bit. So what potentially can happen here is this. Now, this can happen and still be bullish if you don't break back below the top third. So if this drops like this, that's still okay. But if the drop breaks back through the top third of the initial power move, it's over. Now rallies will likely fail. And you got to be careful about trying to buy the move back up here, because that's your likely scenario. All right. And so, and what we've done is we've simply done this. We have covered this scenario. Check it out. We've covered 3 scenarios. Scenario 1, the sideways drift that maintains the top third, the downward drift that maintains the top half, the upward drift that also maintains the top third. Okay? This must maintain the top third to stay healthy. If we break, it's over. If we break, it's over. All right? Now, this really comes in it's very handy. There's virtually not a day that goes by that I'm not in some way playing this